Hello and welcome to Hot Money on BloombergQuint Live, India's first digital live streaming business news service. This is the show which gets you a complete wrap of all the stocks that are buzzing in trade. I am Larsen Toubro. Let's welcome our guest on the show, Kalra of Target Investing and Mridul Jalan of Senora Advisors is joining me today. Many thanks to both of my guests for joining in today. On the show today, we discuss and analyze the numbers of Bajaj Finance and Bajaj Finserv that came in yesterday. Bajaj Finance obviously reacted during market hours because it came with numbers during market hours. Bajaj Finserv is reacting negatively to some bit of weakness that is seen on the counter. L&T is seeing some bit of buying ahead of the union budget. We discuss whether the upside will continue in the stock. Obviously, it's a budget favorite stock, so whether the trend should continue. Jubilant Foodworks reported a steady quarter. Same-store sales growth also met estimates. The stock is trading at a record high. We analyze the quarter gone by. And lastly, we ask our analyst about one company whose earnings surprised them in the third quarter. It could be either on the positive side or the negative side. So that's something that we will discuss in today's edition of Hot Money. Let's start with the first one. The big stock yesterday was Bajaj Finance. Continues to impress. Today it's trading flat in trade. Bajaj Finserv obviously on some bit of weakness on the insurance business is down 2%. But what's the view ahead on these two counters? That's something that we will discuss. Samir, I'll start with you. Firstly, Bajaj Finance, what did you make of the number?
So I think numbers were good given the QIP raising, the cost of liquidity is somewhere increasing, but the availability of liquidity was still sufficient for Bajaj Finance to pick up the festival season and help out the market share increase. So that was good enough for them. But I'll still stay a little cautious because their two-wheeler, three-wheeler book doesn't look that great to me, and even they have been cautious about it. For me, March quarter is more important because the actual QIP raising funds get more deployed in the March end quarter. And now this becomes a non-seasonal mostly because till 26 Jan you had still some consumer-led growth. But beyond that, there's no event or festival season properly. So this really tests whether the quarter-on-quarter improvement which you saw in the December quarter will be sticky enough to remain the valuations at these levels. Because now your valuations and the premium is at least 40 to 45% above the 5-year average. So that has to improve quarter-on-quarter. So AUM growth can still slow down, but the profitability has to maintain itself, at least on quarter-on-quarter basis. So I think it's a neutral for me, and it's the best place to do a SIP.
Okay.
Rather than calling the top or a bottom or finding a right price, it's better to do a SIP because somewhere it surprises on the liquidity availability and how they are able to push it up. And that's where I think everyone cannot time exactly. So it's better to be staying in a SIP mode.
Okay, what's your sense on Finserv? Because that derives most of its value from Bajaj Finance. But apart from it, the other businesses, is there cause of concern? Because I think the general insurance business didn't do well. The life insurance business did well. But how did you analyze the residual business?
So I think general insurance has been burning money for them for quite a long time, and now the financials also got off the cliff. If you compare it to, let's say, ICICI, Lombard and other numbers, they are still very behind the curve, let's say, in that certain sense, and they are still losing out cash on that kind of a business. But I see life as a better opportunity in that system, but I would not recommend Bajaj Finserv to be invested because the drag on the general insurance is much bigger than the plus provided through a life. So it's better to get exposed to Bajaj Finance directly rather than creating a value at first.
Well, everyone was happy with the con call details on Bajaj Finance. I think there were a bit of concern that were raised on Bajaj Finance's numbers. I think there were a bit of concern raised on Finserv's numbers. Were you disappointed with the numbers that came out?
So I think if you see the general insurance market, Bajaj Finserv has been losing out market share for past 6 to 9 months. It's not something which has come up all of a sudden. It's just that now they're pushing the products much more on a lower margin and more expensive for them. So that's why the margins are getting squeezed as well. So I really don't see a very positive scope of general insurance turning anytime soon.
Okay, what's your sense on the numbers? First, let's talk about Bajaj Finance, Mridul.
So Bajaj Finance, operationally the numbers was good. As Samir said, the festive season helped them with the AUM growth. The fact that they raised capital recently was seen in terms of NIMs being better than the expectation. I think the benefit of a fundraise on NIMs and growth will continue for this quarter. What we need to realize is now the stock is at, in terms of price to book, is at 7 times. In terms of 1 year forward earnings, is at 33 times. The headroom for error is not there. The margin for error is not there. So we will watch the number closely. It's a stock which is amazing quality with growth, cash flows, everything. So it's something which has to be in the radar of an investor. At these prices, I think the risk reward is not very favorable for a buy. In terms of valuation, is there a scope for a further upside? Probably another 5-10% if the market is good. But I'll probably wait for a correction to enter into the stock.
I think that's been spoken about a long time, that valuation is high and there is no scope for error, but quarter on quarter Bajaj actually keeps on surprising the street with its number, because their belief is that the penetration is very low and they have that market. You think that somewhere or the other they will falter, or they will be able to match up to this?
It's not about faltering, or it's not that I hope that they falter. It is about the where the markets are. If you look at it, 6 months back or maybe 9 months back, the stock went as low as 2,800 and bounced back to 3,800, which is what qualities are. When the market corrects, they give amazing opportunity to buy. Now, why did this sudden run up? I think this run up is not only because of numbers. The fact that in the recent rally, Bajaj Finance didn't participate at much. When the market moved from 11,900 to 12,300, while ICICI Bank went up by 15%, Axis went up by 10%, SBI went up by 15%, Bajaj Finance hardly moved. Right? So this is a catch-up part of it. My sense, I'll again maintain the point that it's a good buy in every dip.
Okay.
Will I jump and buy it at this point of time? The answer is no. Do I expect them to falter? The answer is no.
Okay.
But it's at what risk reward it excites.
More like a SIP, what Samir was speaking about.
Exactly.
What about FinServ? What did you make of that number?
We actively don't track FinServ. We did look at the number. Again, the point is their main value comes from Bajaj Finance.
Yeah.
So if Bajaj Finance does well, FinServ typically does well. And that holding company discount and it trims when Bajaj Finance is doing well. In terms of life insurance business and the general insurance business, both the businesses are pretty good businesses. But if I have to play, I will rather play Bajaj Finance independently, and that is why we don't track Bajaj FinServ actively. From a numbers perspective, there were certain negative surprises that's reflective in the price, but I think it's one-off. So if it corrects a lot, for someone who wants to buy a holding company plus these two businesses, it's a good stock.
Okay, that's the view that's coming in. I think the consensus is that Bajaj Finance SIP mode is something that is more suitable, and the preference is definitely there on Bajaj Finance over Bajaj FinServ. No doubt the numbers were extremely good on FinServ. There were a bit of concern in terms of their Q3 financials. The next stock we want to discuss is Larsen Toubro. It's flat in today's trade, but over the past few days, ever since the results came out, it's managed to participate. It didn't participate earlier, but nevertheless, with the budget coming up, will there be more emphasis on infrastructure? Is that L&T one stock that probably you should have in your portfolio going into the budget? Your sense on L&T?
L&T is up around 5% since the numbers came out a week or 10 days back, while the markets have been tepid. Clearly, two factors which is driving this. One, the fact that the management showed the confidence of delivering the numbers, maintaining the guidance, which was a positive surprise. The other is the lead up to the budget, which clearly signifies that a section of the market believes that something will be done in the budget to bring the economic growth back in terms of job creation, infrastructure investment, and other aspects. My sense is stock will be volatile post budget, which is anyways day after tomorrow. So as a trader, I will look to lighten myself. As an investor, I will watch what happens in the budget, because the stock today is trading at around 16-17 times 1 year earning. If I look at the broad valuation range, it's 14 to 18 times. So either side scope, zyada kuch movement, there is not much there. So I will wait for budget. If they so trust on economic investments and stuff, Larsen is a natural play for me.
Okay, I'll come back to you. Your sense on L&T. Yep. What's should this be in your portfolio?
So I think it's better to own other capital good companies, and then maybe if you're into infrared, then KNR, PNC, these kind of companies. Because what has happened with L&T is, though they are having these order inflows and maintaining the guidance, now Q4 they need at least 40 to 45,000 order inflow, right? Now that is one of the defense orders they've bid for. That's around 45-50,000 crores. There are a couple more big, large construction orders on the industrial end which they have bid for. So if one of those orders comes through, then they'll go above the guidance as well. But again, they're losing out a lot of contracts to these Chinese engineering companies, whether it's on the fertilizer end, the gas end, and there are a lot of industrial complexes awards which they are missing out on. So I think over there, L&T is going a little cautious. That's why even you see the kind of execution is kind of slowing down on the infra side. I'm worried about working capital over there because the defense is using a lot of cash flow movement right now. So I think it's better to stay neutral to it right now. I rather, let it happen financially more 10-15% move up and revive the infra end of the business, and then start putting my money in the SIP mode over there.
Okay, L&T overall, it's not a play for the budget for you at least.
Yeah, not
more like a trader's play.
Yeah, more like maybe a tactical play or a technical play. It might be coming off, not as a fundamental. Even if the infra story starts to begin for them.
Okay, that's the view that's coming in. What's your sense on what happened in the third quarter? Obviously, they met the guidance, they have maintained it. You think it will be tough for them to meet the ask because the last quarter, obviously the orders inflow that they require will be much higher. The revenue growth that they require will be much higher. You think L&T, it will be possible for L&T to absorb all that?
It looks tough. The honest answer, it looks tough, which is why probably at these value it's trading at a middle valuation. I think they are believers of both sides of it, and which is why March numbers will be very crucial with budget announcement also. So for an investor who is typically risk averse, he should wait to buy it, should not jump on the bandwagon. But it's something which you should buy at around 13-14 times earning, which is at 1250 or slightly below that. So a correction is an opportunity.
Have you been recommending any of the capital goods infra names to your clients?
We only look at Larsen's in that. That is space the only company we look at in our style is Larsen.
Only Larsen, even on the capital good infrastructure side, road side,
Yes.
L&T. Anything else that you've told your clients to start accumulating in this space?
So we have been accumulating ABB, Siemens to a certain extent, not that larger extent. Then if you see on the other side, there is AIA Engineering that goes to capital goods and cement in both. These three names have been top on the list. If you go otherwise, then there are these compressor names like Kirloskar Pneumatic, Ingersoll. Those are turning up fundamentally, but we'll be still on a watch list for that rather than putting money.
Okay, that's the view that's coming in on L&T and what should be done. We have an interview with Pidilite, but we'll just go to it. Let's discuss what happened with the Jubilant FoodWorks. Jubilant FoodWorks came out with numbers yesterday, and look at the trend, what's happening. The counter has managed to react smartly. Strong set of numbers coming in ahead of the analyst estimates, and the management commentary was extremely strong in terms of what they're looking in terms of the new food stores that they are opening. They didn't give the FY21 guidance, but nevertheless margins were in line. The base also comes in a slightly with the base that went in higher. That's something that we need to watch out for. So we'll discuss what's happening with Jubilant FoodWorks. Mridul, I'll start with you. What did you make of the numbers, Jubilant FoodWorks? Is that a stock that you like?
So when we look at the numbers, when the numbers were initially flashed, there was a negative surprise on the margin by around 50-60 bips or slightly more. That was predominantly because of food inflation. Once that got clarified on the call that this margin is not going to deteriorate much from here, we can see the confidence coming back in terms of the stock price today. Now, why is that happen? Because operationally, other than the margin, everything was in line. The SSG was decent, the revenue growth was decent, the management oozing confidence of growth by talking about expanding new stores across segments, which is Domino's,
just hold on, I think we have the management of Pidilite. We'll just come back to this. The management of Pidilite joins us to give us more details. Yash Upadhyay is speaking to the management.
See, as far as top line growth is concerned, in our belief it is still subdued. While yes, you can look at our volume growth over a fairly significant base last year. If you would recall, last year the third quarter was our best quarter. We grew volumes double digit. We grew the business about 17%. The fact that we have actually grown over that, in a sense, is a green shoot. But as you said, I would remain cautiously optimistic. I think we will look at the next 2 quarters before declaring success.
All right. And so a large part of the reason why we've seen such a strong performance on the operational front is the lower crude oil prices as well as the VAM prices. Could you also help us understand in detail as to what has been the average VAM prices in the last quarter compared to the corresponding quarter last year?
See, at the last quarter this time, the VAM prices were actually at their highest. Our consumption rate was at about $1,300 a ton. In this year, it would be between $850 to $900 a ton. And that, in a sense, has contributed to the lower material costs.
All right. And sir, is this expansion in your EBITDA as well as gross margins entirely down to the lower raw material prices, or are you seeing some amount of, upscaling as far as your product mix is concerned?
See, we continuously on a regular basis keep upscaling our product mix. So this is volume and mix. Having said that, the largest part of that is simply benign input costs. We've always guided that we will maintain our margins at the 20 to 24% mark as a, on a standalone basis. We're at the upper end of that, and we don't manage to a number, we manage to a range. So we're right now at the top end of that range.
All right. So the reason actually I wanted to ask you this is because another big player in a similar sort of a business, which is Asian Paints, they have said that they want to focus primarily on volumes, and their volume growth has been quite positive, but it has been down to the sales of their low value add products. That's the reason why I wanted to understand that would it entirely be down to the softness in the raw material prices, or even the product mix has improved for your company?
No, in our case, the product mix has improved from a premiumization point of view. While our focus obviously also remains volume growth, we are not looking at volume at any, we're not looking at, in a sense, bringing down the average realizations. So our value still continues to be higher than our volume. The focus going forward obviously has to be volume growth.
All right, so this would be a dual strategy where you continue to, target your margins at the same time grow your volumes as well. So then in that case, in light of the lower input costs, have you taken any price cuts in the last quarter? If yes, then are you likely to take any more price cuts in the upcoming quarters, or at least the ongoing one?
See, on a regular basis, across the board, we have not taken any price cuts. But wherever necessary, wherever price corrections are required on a regional basis on certain product lines, we continue to do that. So we've always said that we would like to maintain our price premium at a certain level. If input costs take the price premium higher, we will definitely take corrective pricing action. This tends to be selective rather than across the board. We've taken it in quarter 3. If necessary, we will take it in the coming quarters also.
So what has been that quantum of price cut? Could you help us with that?
Because it is in select, on a broad basis, it would probably be maybe 1%, but in certain categories it may be higher, in certain categories they may not be, because we operate, remember, across a large range of products, so very difficult to aggregate.
All right. And sir, a word on the industrial products business. For now, at least as far as my understanding is concerned, for the last 4 quarters, we have been seeing strong growth in the industrial products business. Could you help us understand what really aided this performance in the previous quarter?
Yeah, see, as far as the industrial products business is concerned, a large part of the growth is actually due to exports. As the Chinese government has tightened up on environmental regulations within China, we have been one of the beneficiaries of that in the sense that we've always had compliant units who've been exporting, but as units in China have scaled down or shut down, some of the business has come to us. So a large part of the industrial growth is actually due to exports, and it's not due to domestic demand as much as it is due to exports. And this will continue at least for the next 2 quarters.
Okay, that was the management of Pidilite, 1.5% up post very strong set of numbers. I think we were discussing Jubilant Foodworks. Let's get there. The counter is trading at a 52-week high. I'm sorry, we had to cut to the management. But yeah, you can continue with the sense what
yeah, so I'll repeat the point. So basically, if you were to look at the numbers when they were flash yesterday, there was a margin disappointment on the EBITDA front. Predominantly, as the management clarified, that was driven by the food inflation part of it. The fact that food inflation may not continue to be high, or the fact that management told that they will continue to protect the margin here on, and the quality of the growth operationally was very good in terms of SSG, adding new stores in Dunkin' Donuts, on the Domino's side and everything. So as a combination, what it gives is the clarity on the growth path. This stock has always traded at a premium in terms of FMCG valuations. At 50 times earnings, it is not cheap, but it is not expensive also, because if you look at the historical valuation, it has always traded over 40-45 times earnings, even in the times when it was not delivering growth. So my sense is this stock will continue to do well. It's a stock which should be on your radar in FMCG. If it corrects with the market post-budget, it's an opportunity to buy. So because the management is showing that confidence of growth again in terms of SSG, new stores. So it's a buy on decline for us.
Buy on decline, and you were happy with the management commentary on that front?
Yes, they know their business. They know their business well. Rather.
Okay, that's it. What's your sense on Jubilant FoodWorks numbers?
So I think again SIP route for a company like this, because there are phases where the capex increases, then there are phases where you enjoy higher cash flows. So now you are entering another phase of capex. Previously the capex was done 3 years back when 150, 120 stores were added every year. And now even on a higher base of stores, they are able to deliver a 5.5-6% kind of SSG. So that's good enough for me. And even after increasing so much of competition from Swiggy, Zomato, where everyone thought, Domino's will lose out on the business, they are increasing on the delivery end as well. And that's becoming more profitable for them by every quarter. So cash flows are increasing, the investment has come up. So now when they enter into a higher capex phase, it's better to do a SIP mode rather than expecting the numbers to be really bouncy, because the raw material costs can come off from here, but it won't substantially come off. It might help in next 6 to 9 months. But I think cash flow will start to reduce from here because of the higher capex plan. So it's better to do a SIP and then wait for it.
Okay, so SIP plan again on Jubilant FoodWorks, trading at the day's high. So there is the positive traction that's coming in on the counter. And the final stock is basically sticking to earnings. We're asking our guest whether they saw any result that probably surprised them on the positive side or the negative side. Samir, any result that surprised you?
So I think for me, I expected HDFC Bank to report a better asset quality, at least on a sequential basis, because your AUM growth was higher, the advances growth was still there. You turned a bit cautious, but still your deposit growths have improved. So your low cost of funds was there. But the asset quality, if you see, still on a sequential basis has deteriorated. And even the provisions have gone almost to 15 quarter high. So that is a little worrying for me in HDFC Bank, given the valuations they have and the management change which is due. So I think these kind of overhangs right now also puts me into more of a reduce as a rating to it, rather than looking at it to add on dips.
Okay, HDFC Bank, and which was the stock that surprised you?
So one of the stocks which you were speaking to the management recently, Pidilite reported their numbers yesterday. I've not really looked at it in too deep, but I was very much surprised positively with the quality of the numbers, both on the revenue and the margin side. Haven't looked at it numbers in detail, never looked at this company so deep, but I think it's too good now to be ignored. So I will definitely go back on my drawing board to understand the company and look at it. The other number among the slightly smaller banking space, when I look at IDFC First numbers, I think while the headline numbers look weak, the quality of the numbers seems very good.
Okay.
The focus on CASA, the focus on retail book on the asset side, and so the focus on both asset sides and liability sides are in the right place.
Okay.
I think it will probably take time to deliver that in terms of show that on numbers, but that's something which we'll look at it. I don't think the stock trades too expensive, but that's another stock which I will look at post result season from an investment perspective. On the negative side, Z is something which surprised us. I know that they communicated to the market about a negative ad revenue growth, but such a high decline on ad revenue growth makes me worrisome, and I will look at next quarter very closely. Another decline and this stock is probably going down the wire.
Okay, so those are the stocks that probably surprised on the positive side or the negative side. But with that, it's a wrap on today's edition of Hot Money. Mridul, thank you so much for coming in. Samira, as usual, thank you for coming in. Ask BQ comes up next. Stay tuned to BloombergQuint.